What is up guys, Taiki here, and in this video I'll be discussing my own personal crypto exit strategy and why I believe the Terra ecosystem is the best place to go risk off. So if you like the content, please like and subscribe and leave a comment in the comment section below. So let's get started. Okay, so first of all, I'm not saying we're near our top. I'm not saying I'm selling everything. I'm not saying that, right? I'm just saying, maybe 6 to 9 months from now, Bitcoin's at 6 figures, ETH is at 5 figures, you're super rich, your friends are telling you that Doge is the next big play, right? Maybe that's when you should start to be worried, right? It's like, okay, who is the incremental buyer at that point? And then you're just like, okay, maybe I should go a little bit risk off, right? I'm just saying, let's just plan for that scenario in the future when we're all feeling euphoric and we feel like going risk off or something, right? So that's just like the point of the video, right? Just planning ahead for the future. So I'll go over the reasons why I believe the Terra ecosystem is the best place to be. But in this video, I'll just be covering the two major protocols called Anchor and MIR, right? There are more. There are a few other more, and there's gonna be a lot more in a month or two. But just for the sake of the video, for simplicity, I'll just be covering these two protocols. So what does Anchor earn? So Anchor is essentially Anchor is a pseudo money market essentially, where you can earn a fixed roughly 20% on your USD, which is an algo stablecoin. And you can use your Luna or ETH as collateral to borrow more UST. So I'm not going to get into the economics of UST. I have a whole playlist on that, which I'll go over later for the sake of simplicity. But it's gained a lot of market share. There's a few $1 billion already into Anchor, because there's a bunch of people that just wants to earn 20% on their stablecoins, right? And also you can get insurance on this. So if you're kind of worried about the algo stablecoins, like the pegging, etc., then if you're deploying size, then there's insurance, which is good to see. So on the borrow side, what you can do is you can put your Luna or ETH as collateral and borrow dollars against it. So this is a way for you to take leverage. You don't have to do this, but the reason I'm doing this is because right now the Anchor protocol is paying me 22% to essentially borrow dollars. If you look at the bottom right area, you see that borrow APR is 25%, right? So which means I'm paying 25% on my $9,600 to Anchor, right, as an interest payment. However, the distribution APR is 47%. So Anchor is paying me 47% paid in the Anchor token, right, the ANC token, to essentially take off this loan. So I'm being paid to borrow, so why not take on why not just take a loan, right? As long as your liquidation level is at a relatively safe amount. And the Anchor token, obviously, it's a farm token. Everyone's farming this for free, like myself. So initially there was a pump, it kind of dipped down, but recently there's been relatively strong demand for the Anchor token, which is always nice to see, right? Because I'm essentially farming this for free, and if a bunch of people are buying it, then awesome, people are buying things that I'm farming for free. So hypothetically, if you do want exposure to Luna, right, I'll go over scenarios where you don't have to take on Luna exposure, right? You don't have to buy Luna, but let's say hypothetically you deposit $10,000 of Luna as collateral. You can borrow, let's say $5,000 of UST, which earns roughly today, the day you're recording, 22%. And then with that USD, you can redeposit onto Anchor for 19.5%, right? So it's yield on yield on yield, which there's a lot of cases like that on the Terra ecosystem, which I'll go over later. So this is the most simple one that you can maybe deploy, I guess, outside of just putting UST into Anchor, right, for the 19.5%. But Anchor is, I think it has $2 to $3 billion in TVL already, and there's lots of demand for it, and that's one of the reasons Luna has gone up so much. So let's go over to the other side of the equation, the MIR protocol. And the simplest way to explain what MIR does is it's essentially a synthetic asset protocol, where you can, in the screenshot, you can essentially buy synthetic assets like Google, Polkadot, QQQ. So as an American, this isn't that valuable to me, right? Just because I can go to Robinhood or Fidelity to buy this at any time. However, if you're living in a country like Thailand where you don't have access to US stocks, well, maybe this is a way for you to, I guess, gain exposure and to buy, let's say buy Apple as a store of value or whatever. And the reason I love MIR is because it's a great farm. So here's a screenshot of the MIR farm. I'll go over it, how this works later, but essentially you can be paid, let's just hone in on the Amazon part, you can be paid 30% to buy Amazon, right? Which is kind of incredible, because I own some of these stocks here, Apple, for example. It's why am I holding Apple on Robinhood or something when I can use Mirror and be paid 28% to long Apple, right? So this is why I think it's like a good exit strategy, because if you want to de-risk from crypto, like why not just like long like tech stocks and just like earn yield on them? So how does long farming work? Well, let's say you start with $2,000, right? How to farm Amazon is you essentially split that up into equal pieces, 50-50, $1,000 worth of Amazon and $1,000 worth of UST. And then you provided liquidity, right? I'm not going to go over that in the detail in this video, but I have a whole playlist on it if you want to know like what that actually means. But essentially you split up your $2,000, $1,000 Amazon, UST, provide liquidity, and earn 30%, which is pretty good, right? You long Amazon for $1,000 and you're being paid 30% on that. And like I mentioned, I have a whole playlist on this. The top video that you see here is an hour-long video. I just go over the entire Terra ecosystem along with the Terra expert. And I also have a beginner's guide on earning 50% APY on the Terra and Luna ecosystem using Anchor and Mirror, right? So if you want a more in-depth guides, please check out this playlist. I'll link it in the description below. Okay, so Anchor earn, like great. But the amazing thing about I guess decentralized finance, crypto, is that these protocols, they don't just like live in isolation. Like you can actually put them together and stack yield on top of yield on top of yield. So let me just go over that. So as you can see, I shared a screenshot earlier, but I have money. I have some UST on Anchor Earn, earning 19.5%. And this might be a complex topic to wrap your head around, but let me just try to explain it in the most simplest ways possible. But when you deposit $8,000 of the UST into Anchor, you receive $8,000 worth of AUST. Okay, so AUST is essentially your claim on like whatever money you have on Anchor. And AUST is an interest-bearing token that appreciates 19.5% a year at current rates. So a quick example of like how this actually works is that when Anchor first launched, 1 UST equaled 1 AUST, but after 1 year, assuming that the 19.5% is stable, 1 AUST will equal 1.195 UST, right? Because it appreciates 19.5%, right? So AUST is a claim on whatever UST that you have on Anchor that accrues interest over time. So sorry if that's complicated, but let me just move on for the sake of the video. So on Mirror, I showed you a screenshot about like long farming, but there's also a thing called short farming. And with a short farm, you can actually use AUST as collateral. And let me just go over like how important and how powerful that is. So what I'm currently doing is I'm shorting gold, okay? Not because I'm bearish gold, but just because I just want to collect the 45% APY that Mirror offers in the short farm section. So this is my dashboard, right? As you can see, I'm shorting gold right now. Let's just hone in there, right? So right now I have $10,800 of 10,800 AUST, which is worth 11,900 UST, right? Because AUST is worth more than UST, etc., because it's an interest-bearing token. But the thing is, when you short something on Mirror, you need to put up collateral, right? Because that's how the Mirror works. So where is it? Yeah. So essentially, I put up collateral, which is worth roughly $12,000, and I borrowed $6,000 roughly of gold, and I sold it, right? Because that's the definition of shorting. You borrow an asset, you sell it, hoping to buy back lower, right? That's the definition of shorting. And this farm has been working out pretty good for me. Like I feel like every week or so I earn like $100 ish of Mirror tokens, which is really nice to see, right? Because I'm earning this for essentially free. And the reason I'm shorting gold is because it's like the least volatile asset. So even if gold is in the bull market, it's not gonna like appreciate too much where I'm gonna get liquidated on my short. So when you short something, you borrow an asset and sell it. So the cool thing is that like when you short gold, you actually get UST, right? Because you borrow gold and sell it, right? Because you get UST. So what you can do with the $6,000 that I unlocked is I can go back to Mirror and like let's say long farm Amazon or something, or I can put that back into Anchor to earn 19.5%. Okay, so let me try to summarize that. So option A, okay, so what I'm currently doing, right, is I have 12K in Anchor, which is earning 19.5%. All right, so the 12K of Anchor, I get AUST in return. I take that AUST, put it into Mirror, short gold for roughly $6,000, earning 45% APR. And then I get UST back, right, because I shorted gold. I can put the $6,000 back into Anchor, earning 19.5%, right? which is pretty wild, right? Yield on top of yield on top of yield. So I take my Anchor UST, which is earning yield, I put it into Mirror, short gold, which is earning me yield, and I take the dollars that I earned from shorting gold, put it back into Anchor, which is earning me more yield, right? It's kind of complex, right? If you don't like, I'll show like a table later, which makes more sense, but that's one option. Option B is you do the same thing, but like I mentioned earlier in the Amazon example, you can take the $6,000 of UST and long farm Amazon, which you can earn 30% on, right? So there's different things you can do, but it's just two applications, Anchor and Mirror, but there's so much you can do, and this is one of the reasons that like Luna has done so well. And this is like the basic concepts of yield farming. You just take liquidity mining programs that these protocols use, and like essentially because these applications, they want you to, I guess, deploy capital on their protocol, right? Because that's how they become successful. So in exchange for you to deploy capital on these protocols, they'll give you tokens, right? For example, like I'm earning Anchor tokens, I'm earning Mirror tokens, etc. So that's the concept of yield farming and why it's so powerful. And like I mentioned, like this is the reason why Luna has gone parabolic. Viewer discretion advised, but on January 1st, Luna was at 60 cents. Okay, like that hurts my soul, right? I'm like, oh my god, like I wish I got into it earlier, but it is what it is. So this is like the rough setup that I have. Hopefully you can see it. I hope my camera's not blocking anything. But I started with 16.4K. I started with $10,000 of UST and I bought $6,400 of the Luna back below when the price of Luna was below $8. So I'm doing pretty well there. So right now, like my balance is worth that much, which I'm pretty happy about. And I guess like when I was explaining like the yield on top of yield concept, it's kind of hard to wrap your head around. But if you kind of lay it out like this, you see that okay, like like I started with 10,000 UST, but I'm actually deploying close to $20,000 in the Anchor earned because I'm using my Luna as collateral, borrowing dollars against it, and redeploying that capital into Anchor. And also, if you look down to the Mirror long farm and short farm, I'm shorting gold, which I'm earning like 45% on, and I'm longing a stock called Galaxy Digital, right? Which is like a stock I'm bullish on. Me personally, right? Like not financial advice. And given the farming rates that are currently available to me, you can see that right now I'm earning 63% on my entire position, right? And looking at this, like when I look at this, I'm like, okay, like Terra is a great place to deploy capital. And though I do have Luna exposure, like you don't even have to have Luna exposure, right? Like just hypothetically, like even if I took out the $6,400 of the Luna that I bought, and you only played with UST, well, you can do the same. You can deposit UST onto Anchor, earn AUST, use the AUST to short something on Mirror, and then take the deposits or take the proceedings from the short and redeploy it into Anchor or long farm something on Mirror, right? And you're not really taking on any volatile crypto exposure risk, which is super, super powerful. So this is one of the reasons why I think the Terra ecosystem is going to be my go-to place to go risk off whenever I feel the market is way too overheated or I'm getting the top signal vibes, because I can earn 50% on my dollars without taking on a crypto exposure. And even if I did want to take on a crypto exposure, I could, because I can go on Anchor, purchase Luna or Ethereum, use it as collateral, borrow dollars against it, and like farm with it. So there's so much you can do on the Terra ecosystem, which is one of the reasons that Terra has been like one of the top performers in 2021. And I guess it's like a general lesson with crypto and DeFi as well, is that you might be asking yourself, like, why is Luna like doing so well? Why are other ecosystem tokens doing so well? Well, if you actually use these protocols, or use these ecosystems and blockchains, you can kind of experience and see for yourself like why people love it so much. And like for example, like the Ethereum community, they're super strong. The Luna community, they're super strong. They call themselves lunatics, right? So I guess like that's the way that I navigate crypto, is that, and I stay intellectually curious. I'm like, okay, like I've never heard about this, but let me try using it, right, and see for myself. And when I use something, even if my friends tell me that it's not good, if I use it and I like it, then what's stopping me from like using it in the future? So hope you guys thought this video was useful. Let me know if you have any questions in the comment section below. If you want access to the Humble Farmer spreadsheet, as well as daily updates on how I'm deploying capital in these wild crypto markets, check out my private Discord, and the link is in the description below. Keep in mind, I don't run ads, I don't do sponsorships or referral links, so that's the way I differentiate myself. On YouTube, I don't make like 100x altcoin videos and stuff. So thank you guys for watching, have a good one, and have fun farming out there.